Super Mario to the rescue. Hello Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your midday market report for Thursday, the 6th of September. Now that Mario Draghi, I'm calling him Super Mario, the head of the ECB has spoken, we will let the markets decide how they want to interpret his language. Early indications are that markets like what they heard from Super Mario and the shorts are getting squeezed out of the major indexes yet again. Of the three major equity markets we track in this report, only the Dow has not yet confirmed itself to be in a bull market. That may change very soon. Early today, the gold market shot over the psychological $1,700 an ounce level based on concerns that the ECB would be printing more money. That, coupled with the Fed printing dollars, would lead to inflation worldwide. It was 1 year ago today that gold made its all-time high of $1,920.26 an ounce. That was on September 6th of 2011. We have been and continue to be bullish on gold and silver. Now let's go to the charts and our trade triangles and see what's happening in the markets. So I'm going to go right to my portfolio. We'll start off with the S&P 500, which is up almost 2%. And we're going to be looking at a couple of things there. But here's a massive move today. You can see it just pop right up, plus 100 there. All of our trade triangles, even though this is not turned yet, are green, I should say. And I'm going to scope this out because I want to show you a bigger picture in this market. And here it is. I want to take everything off the screen. And I'm going to just put in a simple line chart, which sometimes I like to look at. And I'm going to draw a simple trend line here. So we're just going to go right from these levels, straight line, boom, right across here. And what I want to share with you is this. This is what we would call a massive energy base. If you look at this market, you can see that, boom, huge energy field here. If we count from, I'm going to go from this level right here, 1280, and I'm going to go from the 1420 level, 1420. So if we subtract 1280 from this number, it gives us 40 and 140. Okay, that's the difference between this number here and this number here. We then take the 140, and how we get to the 140 is take this level, going all the way down to this level. That's 140 points. We then add the 140 points to this level right here. So that would give us a 1560 target zone for the S&P 500. I'm not sure when it's going to happen, but this is a huge, what I call, energy field right here. This whole thing, very, very powerful. If we close up at these levels today, over 1430, I think we're really going to be off to the races. Remember, tomorrow is Friday, 52-week rule. Definitely want to be long this market for the weekend, should we close higher tomorrow. Now remember, no shorts have profits in this position right now. Nobody has a position that's short that has a profit in it, period. So there may be some shorts who are still hanging on. They may get squeezed out tomorrow and possibly later today, but generally the trend is clearly for this index, and this is the S&P 500 index right here, is up. So let's clear the screen. Go to our next market, and we're going to be looking at the Dow. Now, the Dow is the only market that hasn't really quite made it over these highs yet. You can see if we just draw a very simple trend line in, going from here to here, you can see it just really hasn't done it. It's right up against resistance. Now, it may smash through on the upside tomorrow, but it's not quite there yet. So moving along to the NASDAQ. The NASDAQ is a different horse of a different color. We can draw a trend line in there from these levels through to here, and you can see quite clearly that we've really taken out these previous highs, and we're in a bull market again. A massive base for that, starting at 2,750, and I guess we could measure up to the 3,100 level. So there's you just subtract those two numbers. That's 350 added to 31 even. So we're looking at around 3,450, 3,500 on the NASDAQ. So let's see how that plays out. But let's go into the next markets. We've got lots to cover today because there's been a big announcements. And what we're going to do is put our chart studies back on, the Donchian trade channels, and also the parabolic. And we'll go back to our simple candlestick chart, which I like. Now, here we are. We're looking at, again, we're looking at the crude oil, and you can see this October crude oil. You can see pretty clearly what we're up against here. There's not much going on. Here's how I see it. We've got resistance right here at 98. That's $98 a barrel. Now 98 is also a 61.8%. Should go right there. 61.8% fib retracement. Very important level. Now we also have support right coming in here at 94. So I think that's where we're seeing the markets really trapped between this range here. Not really dramatically going higher based on the news or the expected news or the inflation concerns. It really hasn't got anywhere for the last, 10 days or so, maybe even longer than that. But here we are, we have our monthly trade triangle, negative, weekly positive, giving you this conflict, this trading range that we're currently in, and that gives you the 70 range. So again, we're in this range. I would say, given inflation and what's going on, we probably will see this market break out on the upside. I want to see it happen first of all. I don't want to guess. I want to be confirmed and see what's happening there. So let's clear the screen off and go to our next market. Next market is going to be the euro. And the euro really hasn't, it's kind of like we've been over the 126 level before, really hasn't gone anywhere. And the major thing I'm looking at with the euro is that even though the news was probably it saved the euro, it's not exactly a dramatic move today. But here's the big thing. I think if we look back here, this is the key level. I'm just going to draw this freehand if I can. So the 127.50 area is definitely, that's a 1 right there. The one, let me just change that. 127.50. That to me is really a key level for the euro against the dollar. We may just pop through here and go a little higher, a little enthusiasm, but we're stuck between the 125 level, which is right here, and currently just about the 126.50 area. So I think given the fact that really not a lot of enthusiasm today on this market, I think the reality is we'll have to see how everything plays out in the marketplace, how the traders both in Europe, Asia, and here in the States digest this sort of news that came out today, and how the market filters it through and see exactly what it means, because there's no free lunch in the marketplace, and there may be some hooks and bells and whistles on this offer that has come from Mario Draghi. So we'll have to see how that plays out, and if countries actually ask for any help, or if they don't, we'll have to see. So the market ultimately decides what things are worth. So here's the gold market. Actually, we were higher early today. We traded as high as $1,713. We're sort of on the low end of the range today. I think given the fact that we popped out of this top of the Donchian trade channel, I would not be surprised to see it come back down. However, I would be more inclined to be a buyer than a seller here, as all of our trade triangles are currently in the positive zone. And this market has clearly got an opportunity to go much higher. We are celebrating today's 1-year anniversary of the all-time high in gold, and we're obviously making a high today. So I would not be surprised to see this market come back down, find some good support, and then resume its uptrend later this year. Very bullish on gold longer term though. So let's go back to our next market, copper. Copper, given the huge move in the equity markets, really remains trapped between the 355 level and the 340 area. There's really not much you can say about that. We have sort of just turned down on the Donchian trade, the Williams percent R right here, and we're at plus 60, meaning a trading range. So we're at the top of the trading range, so the next logical place for this market to go would be on the downside. So maybe we'll do a couple more days like here and then have a little pull back down, but we'll see how that goes. But generally speaking, you can just see quite clearly visually the fact that this market has really sort of gone nowhere, and this level here, this 355, is definitely a line in the sand, as is, this is the one line in the sand, this is another, and this is the major line in the sand. So these are the areas of support it should find if it comes back, but the area of resistance has got to be this 3.55 level on copper. So let's clear the screen and go to our next market. And the next market we're looking at silver. Now silver's acted extremely well. However, we may be putting in a small top here, and we'll look for more consolidation. But generally speaking, I think this market can and will do a little better longer term. It's a year ago today, silver was trading close to $50 an ounce. We are a long way from there, but all of our indicators are positive. And if we scope this out, you can see pretty much the same energy field we talked about before. We've broken down through that trend line we discussed in previous reports. In fact, we can just show you that. You can probably show on a 2-year. Yeah, so we, excuse me, we had a trend line that came from this level here. We can just draw that in. Coming from the highs, coming down here, you can see how it just hit 3 points we wanted to. 1, 2, 3, and broke through there. You see that it hit the point, backed off, came through. So we're definitely in the upswing and in this market. So let's see how that plays out. Next market, the Reuters Jefferies CRB index. This market is trading at 310.44. We like this index. It's a good indication of inflation. And we are closing. Let's get close up on this. You can see the 305 level, which we've talked about previously, is good support. Would not be surprised to see some pullback, but the big level to watch in this market, in my opinion, is going to be the 320 level. That's a ways above here. If the market goes over 320, then we've got ourselves a rip-roaring case of inflation. Up until that time, it's mild inflation, but certainly the momentum here, along with all of our plus 100, is very positive for this market. So I expect to see this would be a very positive, and we would definitely want to see this market give it a star here. So we'll see what happens. But anyway, we'll see how things play out, and we'll be back tomorrow, Friday, of course, end of the week. A lot of people will be looking at these markets and looking what to do, but generally speaking, I don't think anybody wants to be short the equity markets or the metal markets right at this time. So I'm Adam Hewison from Market Club. I'll be back tomorrow. Have a great day trading, and thanks for watching.